Good morning, Paul Georgie from Allendale. It's November 1st, 2010, beginning of a new month here, and we've got a lot of excitement here the next few days. We've got the midterm elections coming up on Tuesday, Fed meetings early this week. We've got possible fund rebalancing here toward the middle of this week, and then we've got the USDA supply-demand report coming out next Tuesday, the 9th of November. All of those items can cause an impact on prices here as we move through this time period. But right now the focus is on the dollar again. The dollar down 18 this morning in the December contract. Crude 79 higher. We've got gold up $2 to $3. We've got stock markets indexes are higher as well. And this is impacting the grains, as the grains pretty much across the board in the overnight session were higher. Corn took out that 588 level, which was key resistance for a long time. We punched through that, went up to the 590 level, and then since have set back a bit. So we're going to need some more news, some more buying to kick in here as we go into the open outcry session. Other news, the CFTC put out their commitment of traders report on Friday, showed that managed money actually decreased their open interest slightly, down only 3,000 contracts, still 423,841 long positions by managed money. Total open interest, or total non-commercial open interest, actually increased as well, up 3,500 contracts, which means that we're getting a lot of the public in this market, and usually a signal that we're due for some type of correction. But as long as things march higher and as long as the dollar continues to go lower, we think corn prices can go up and still hit this target of the 625 to 650 area in the December contract. In the soybeans, we had 385 deliveries yesterday, or on Friday afternoon, all stopped by strong stoppers, so they probably won't come back out again, but showing that the soybean prices on the futures are maybe a little higher than they need to be. So something to watch there. Managed money positions from the CFTC report had a slight decline there as well in the open interest. Weather news, Brazil got some rain over the weekend. Need more. Our weather forecaster is suggesting that we should see some more drying in that Brazilian area this week. So we're going to be monitoring that very closely, as that could become a concern here as we move forward. In the wheat market, Iraq seeks 100,000 tons of wheat. We've also got more rain in South Wales, Australia, where they've had too much rain. They got areas got an inch to inch and a half here over the weekend. Quality is definitely a concern, although that creates competition for corn, as these Asian buyers will go to Australia to buy feed quality wheat instead of corn. Southern plains here in the U.S. still a bit dry, causing some concerns here, and definitely causing some support to the wheat market. In the cattle trade, cutout values were lower there, 96 cents lower in choice, 52 cents lower in the select. Key chart support areas, that $98 area in the December contract. We have seen some of these support points taken out late last week. Key support here today is going to be 98, as if you draw an uptrend line off of the previous lows made in the December contract, that's where the uptrend line crosses. We don't want to close below that, or we certainly could trigger some more fund selling, which the funds also have a large long position in the cattle complex. In the hogs, cutout values there were slightly lower, only 7 cents lower on Friday. Hog weights released by USDA here on Friday afternoon showed that hog weights over the last 2 weeks have increased 3 pounds, which is a significant amount at a time where hog supplies are running at about the same level as they were a year ago. So that's creating the issues here. We think we're going to run into and clean these inventories up here over the next couple weeks. So looking for a possible bottom here, but not willing to step in and buy this thing just yet. The key support area, if you use the electronic charts, we're at around 65.95 in the December contract. We should hold that level. That was a low made on March 26th here in 2010. So if you got any questions, give us a call. I know there's a lot of things going on here in the next few days. It's worthwhile staying in touch with Allendale's research. We're going to try to keep you informed the best we can. If you need to, give us a call. We'd be happy to take that call at 800-262-7538. We wish you a very successful trading day. We'll talk to you tomorrow morning.